David Jaffe with Best Stock Strategy, and here is our 2023 performance. You can see that in the large account, we were up around $150,000. This works out to about 35%. And perhaps the greatest achievement of all is that during periods when the market pulled back from August, September, and October of 2023, the market fell approximately 10%. We were actually up money, and I think we were up money every single one of those months. So the goal here, and one of the reasons why I believe that we trade the absolute best trading strategy, is that we strive to earn consistent profits in all markets, and that includes market crashes and also when the market is in a strong up move. So this is the large account, and actually I forgot to take a screenshot before the year ticked over to 2024. So the real year-to-date returns are about $10,000 to $12,000 higher than this. So it's actually around $160,000 to $162,000 of profit. Now, regarding the small account, we were actually up over 100%. You can see that our year-to-date P&L is around $83,000, where the net liquidation is $143,000. That means that we started off with about $60,000, and then we were up around 135%, something like that. Before you get super excited about these type of returns, let me be the first one to say that a large portion of these gains were due to luck and not due to any skill or strategy. What happened was that in late 2022, I thought that Amazon was trading at an incredibly low price. So I bought a lot of Amazon shares, and I also bought call options. And that was the primary driver behind these large gains. So I definitely don't think it's possible to earn 135% every single year. And I don't even think it's worthwhile to try to earn these type of returns, because remember, the higher the returns that you want to earn, the more risk you're going to assume. So 2023 in the small account just happened to be an extremely lucky year where I timed an entry in late 2022, basically at the bottom, and that was the primary driver behind this performance. Let me show you the actual trading statements. Here I'm on the E-Trade website, so I go to log in. Then I go to Documents, Brokerage Statements, and then let's click on this, 12/31, 11/30. Then we go up here, then we open this one. So here you can see a beginning value of 649 and ending value of 662. And then here you can see on page 4 of 52 where September. So what happened here is that E-Trade was acquired by Morgan Stanley in September of 2023. So that's why for this specific account post-acquisition, it's not going all the way back to January. So here you can see that we made money in October, even though the market was down significantly. We didn't make a lot, but we made a decent amount. November we made around 4%, and then December we made around 2%. Let's see if I can go back. Let's see. So this is before the acquisition by Morgan Stanley closed. Let's see if they have a summary here. Yeah, as you can see here, that it has a beginning balance of 589, net change of 589. That's because they transferred it over to the E-Trade account. And then I'll show you that statement as well. So here's our monthly. So you can see here that after the account went down around 13%, that's when I started implementing proactive hedging. And then you can see the consistency in the returns over the next few months. So then 589 as of 8/31, and then on 9/30, which was the first month that the acquisition closed, it went from 589 to 622. So profits that month were about $32,000. All right, let's do Tastytrade. Thankfully, there wasn't an acquisition in Tastytrade, so it'll be a lot easier to follow. We'll click on December. Done. Open. And then you can see that the opening balance was 133, the closing balance was 140. November. Open. 109 to 133. I really don't like Tastytrade because it's extremely expensive. Look at this debt interest expense, and then I pay about 10 times more in commissions for Tastytrade when I use it. When I compare it to how much I pay E-Trade, I really don't like the user interface with Tastytrade. I have to tap on my phone about 5 times more in order to use the Tastytrade app and to place a trade when I compare it to the Power E-Trade app. All right, that's November. October, you can see we are up about 7,000. September. We actually lost money in September. Yeah, that's one of the issues when you're long stock, that even when you hedge a little bit, you lose money. So here we had like a $20,000 loss. Because again, like I said, a lot of these gains were driven simply by timing our entry into Amazon close to the 2022 lows. August. August we were up around $5,000. July. July we were up around 3,000. June. June we were up around 13,000. May. May we were up around 8,000. April. April we were up around 4,000. March we were up around 14,000. February. We were actually down money in February. We were down around 16,000. And then January, I'm sure we were up a lot. Yeah. January, we were up around $28,000. So there you have it. The large account was up around 35%. In the large account, you can see the consistent returns once we started implementing proactive and dynamic hedging. Because in the latter part of the year, when the market went down in August, September, and October of 2023, we were actually up money. Whereas earlier in the year, our returns were much more highly correlated to the S&P 500. As I said, implementing hedging is extremely important because I can almost guarantee that in 2024, the market is not going to be up another 20%. If you want to learn the absolute best options trading strategy, you can enroll in the options trading course at beststockstrategy.com/memberships. This is the only course that you will ever need to take. It's the best trading strategy available where you can earn consistent profits in all markets. If you have any questions, then leave a comment below and watch the video that is popping up on your screen right now because YouTube believes that you would enjoy it the most.